Hi and welcome to another video. In this video I will, as you can see on the slide, I'll cover the Air Canada stock. This is the Canadian stock and this is a pretty reputed Air Canada airline. I will go into the profile and use the fundamental analysis and 10Q to do that. Myself, Pramod Kumar, I am a CFA charter holder and FRM certified. I also have a riseanalytics.ca blog. In there okay, usually I'll post some lecture notes. So what's the agenda for today? Okay, so the agenda for today is why Air Canada, right? So I'll tell you first why I'm thinking to do Air Canada, which is the AC ticker name for Air Canada. We'll see its total return performance from the past. We'll see how much revenue is diversified. We go over the liquidity ratio for recent quarters because the airline is not running, and recently they published the March 2020, the latest quarter, and one more quarter before. So, and then we'll go very deep into the operating and debt analysis. I'll try to cover some scenarios. For example, if there is no bailout or bailout happen, because there is so much news in this sector is doing very badly now these days because of this COVID-19, and there is a questions whether Trudeau, who's the Prime Minister of Canada, whether they will do bailout, not bailout. So trying to see from all different angles and then try to make our opinion. So as usual, if you're new to the channel, kindly subscribe, and if you like it, please like or put your comments if you want to see any other video. Usually in my channel I do very purely fundamental analysis of the stock, which is we want to keep for the long term, and this kind of market will give the opportunity to basically invest in the cheaper stock. Okay, so let's get started. So without further delay, let's say why Air Canada. If I go to the Air Canada, I have three different reasons for it. For sure is proudly Canadian, and we are proud of that as a Canadian. I'll let me show you to all these three things. Okay, now I'm on the Air Canada company page. It's a company profile, so it's pretty so when we read it, it's you can see, right? So first thing is Air Canada is Canadian largest airline. Most of the Canadian people like us, we already know that, but if you are not from Canada, maybe it's good, I thought it's good to give that profile introduction, quick profile introduction, right? And in 2018, which is almost 1 year ago from now, 2 year ago from now, they carry 51 million passenger. So you can see the volume here, right? 51 million, right? Which nearly direct service to 220 destination on 6 continents. So it's a pretty broad network what they have, right? And if you see, they are also growing. It's not only they just stop, they grow as well. The global network expand. They say in 2019 and 20 they expand to Brussels, Vienna, St. John's. From Montreal they have some flight, from Vancouver to Auckland they have flights, right? And in 2018 they added a new 29 new routes, which is a big thing. So the company is pretty much growing. And if you see here by the numbers, global network passenger direct to 62 airport in Canada. Global scheduled directly service directly to 62 airports in Canada, 53 in United States, and 101 in Europe, Africa, Middle East, Australia, Caribbean, Mexico, Central America, and so on. So you can read, and they also have collaboration with Star Alliance. I'll put this link so you can go and read it, right? So, and especially from the, and so this is from the global coverage perspective. Okay, so we get it. Next thing, okay, so what about Canada, right? If just to give the Canada, right, a lot of immigrants are coming to Canada, and that's what the Canada.ca is saying, right? Let's see how the growth is. In 1979, only fewer people working to support the retirees. So you see there in 1979, only very few people to, and their target is less retiree depend upon less people as actually to more people, right? So the ratio from there it will be from 2 to 1, right, rather than 7 retiree to 1. Okay, in 1971 there are more retiree and less, and people are basically the ratio is trying to, the bottom line is, if I don't want to confuse you on the ratio, so it's easily seen here that they want to bring more and more immigrants. So in 2019 it's from 330, 800 is 341 and 351 in 2021, and it's keep increasing, right? And so that's the number. That's the good point. The another good point which I mentioned in the slide is also mentioned that in Trudeau, who is the Canadian Prime Minister, he make a comment there. So this is a CTV News website, and here it's the comment made by here. It's in the quote: "We need to continue," made by Trudeau, and it says, "We need to continue to have a strong airline sector once this is all done." Trudeau told media reporter on Monday. What he's saying, we were looking very carefully at how to support the industry like that so many important that are so important to Canada and to Canadians. So he's considering to, but he haven't made that right any contribution yet, but they are thinking about it. So this is on the high level, right? So okay, so we get all these thing that there is a reputed airline, might be their government bailout promise, I'm saying right, and the economic growth for sure, because this is one of the major airline to come to Canada. If the immigration growth, the population growth, so the usage of the airline, in addition to broad its network, and its frequency will be increased more. Okay, so that's on the high level. Now let's see it's the next item, which is the total return. So the return for sure this year is not correct, not good. But if you see from 5-year return, it's 5.84%, which is not bad for the airline. But over 10 years, if you compare it, it's the total daily return was 25.68%, which is way good, right? So this is another good signal from the Air Canada stock. Okay, so let's continue. Now we'll see on the revenue diversification. So this section I cut from their 10Q. So you notice here on they have two kind of a business, not only from passenger, but they also have cargo revenue as well, which for sure the 2020 numbers are not good, but I just want to highlight here from the diversification of. So this is not only in Canada, which is 944 million they bring in Canadian dollar in 2020, but in 2019 as well, if you see, and is over 1 billion. From the US side, it's also coming 942, Atlanta, Pacific region, and other part. So, and from the cargo side as well, they're doing pretty good from Atlantic region, Pacific region, right, and Canada of course, and other regions. So they're well diversified. It's not like they're dependent only on the Canadian side of the market as well, but it's widely diversified in terms of revenue. So that's another good side for me to look. Okay, now we have from the global economic perspective, at least if we keep the COVID-19 thing side, and it also has the revenue diversification perspective. So this is giving some good economics that this can be a good stock to look into, and maybe is. Now I have a question, maybe is beaten by the bad because of the coronavirus only, and fundamentally strong, right? So let's continue our diversification. So far it's look okay. Okay, so next I'll go directly to the 10Q and the spreadsheet. So this is the company 10Q statement. As you can see, this is directly coming from Air Canada website. So this is their financial statements on the balance sheet pretty much. So this is the assets and the liabilities on the quarterlies, which actually I think this is the this one, sorry, but this one is quarterly, that was annual, so I take the both. So this is the quarterly 31st March 2020, and the last quarter they publishes which is the year end, right? So if you see from the cash statement, the total current assets, and the liability. So what I take the numbers from here. I just want to showcase, right, that how I got the numbers, and when I just plug into this. So this is 31st March and this is 31st December. I took all the current assets basically, which is year end less, and the cash position separately. How much is their cash right now in their hand, and then what is their immediate current liabilities, right? I took it that. So when I try to do the current ratio, on the this year or on the quarterly, it's not bad. So that's why I highlighted in green. So basically the current ratio was good. So it seems like it's covering the current liabilities, and the cash ratio is almost equal to 1. So which looks pretty good in terms of that. The next level, then I try to see, okay, if this is good, then what are the company major expenses? So if I go back here and you see and then I try to see the company major expenses from the operating expense, which is listed here. So there are all other expenses are here. For example, the aircraft fuel, wages, regional expenses, maintenance, and blah blah. But I take the two major expenses, which is salary and the fuel, top two, right? Other like a regional airline expenses and all, I just exclude it. I just want to see, okay, very high level, top level expenses. What are they? When I try to plug in for this and last year, the total, right? Then I say, okay, that those expenses. Airline fuel is 20% and the wages is 20%, which is significant to keep this carrier running. Okay, so you can get from this idea. Last year it was around the same quarter in ballpark. This year maybe it's reduced, the price of fuel and all reduce, and it's not in usage, so that's reduced as well. So now it's telling me that if we cover the major expense which we need to look into, this wages expenses, and then I'll say, okay, what are the other debt it has, right? So this is the short-term expenses, because if airline is not running, then this means I don't have to worry about fuel, right? Because it's just not using it. But from the salary, they still have to pay the salaries if it's not did layout or other things doesn't happen, right? So let's take some other debt. Okay, so the next is here I'm trying to showcase here is what are their this year debt obligations, what they need to pay in terms of their long-term liabilities, and this is from remainder of this year to 2024. So we'll focus on this year and the next year, right? Because these are the critical years. If the company can survive, they can survive for the longer term. So that's what I'm thinking of. So even so far for the remainder of the year, so today is May 25th when I'm making this video, or 2020, but still we have 7 months left, and then they have the long term, including leases and all, 801 million in liability, okay, which includes the aircraft, regional aircraft, land and building, their lease commitments, and other long term obligations. On this, they also have to pay interest, because if you take something on loan, you have to pay interest, right? So there is a 357 million for this year, and next year is 389, and this is for the long term obligation for next year, and so on. Okay, so let's try to use this in doing some analysis. Okay, now what I'm trying to showcase here, I just did some scenario, and then I like to share this scenario with you. Okay, so this information is got from page 11. That's what it's trying to showcase. Okay, so this is the two cases I did for remainder of this year 2020. The one case is worst scenario. In worst scenario, what they have some capital commitment for the future aircraft. Okay, maybe I'll share this first as well, that how this information is coming. Okay, now this one is before I show you that grid which I was trying to show earlier, this information is their capital commitment. So now they have three major part we have seen: their debt, which they have to pay by yearly, their interest on debt, and the capital commitment. Capital commitment consists, what is this? So capital commitment consists of the future firm aircraft delivery and commitments related to acquisitions of the other parties. So basically these are their capital, maybe their future aircraft which they are buying and all those stuff, right? So that's what they need to do. So this is for this year is 1.85 billion, and next year is even double, 2.30 billion. Okay, so now we have these numbers. Okay, so this is the capital commitment for the airline, which I just have shown you that it comes from here 1085 and 1085 because it's the same year, just two different scenario, and this is 1023. Sorry, 10. Sorry, this one 21 is 2030. 2030. Okay, now for this year we have still have two more quarters to go. I haven't seen the result because we only see the result from first quarter. So based on that, I make a rough estimate that they still need to do the 2.38 billion in terms of the salary payment. Okay, and then the debt for this year is 801, interest is 357 million, and the total debt what the company need to pay this year, if I just keep all other minor expenses aside, this is just the major expenses, right, which is 4.631 billion dollars, right? This is the Canadian dollars. Just want to highlight that. So this cash remaining so right now they have this cash balance which is 2.5 billion. And if now my thing is, if companies, this is a worst scenario, if company is not operating, if they don't have any cash, they didn't get any money from government, then the company is in very worst case and they are in 179% in total debt. So I think they need to sell out something, and that's the very bankruptcy going to that, or bailout need to be happen. But this is a worst scenario. The another scenario is, and on this scenario as well, I assume that for rest of the year the market won't open and the zero cash they will get, right? This is the extreme case. Or maybe you never know, maybe the COVID second wave will come, then you never know, maybe this case can be hit. So that's one of the reason I just did some extreme analysis on this one. The next case is that, okay, we have these expenses, and then we have the cash flow from the last year, which they can use, but they receive the government grant, right? I assume that receive around 2.2 billion, right? And based on their last year, the cash flow, I expect that for the 50%, they only do the business, the 50%. They are only in 50% open economy. So this means for rest of these 6 months, they only, whatever is their top skill, they are still doing 50%, right? If I'll do that kind of scenario and they get 6.2 billion in terms of cash, then this means they are covered for this year. But I expect here 2.2 billion from the government bailout. But if the government bailout is, let's say, is only 1 billion, that's also they are good, they can cover that, right? So not a problem for this year. But they do need something from the government, and I expect that they should give more, right? Here I am not doing that they are going further for the cash generation, because this is purely outside of their core business. If they do that, it will further increase that. But I just want to do the pretty worst scenario or medium scenario, right? What will happen in the next year? Again, they need a 2 billion capital commitment, or 2.030. The remaining all the salaries for the 4th quarter, I expect this to be this, the interest, debt, and so on. So they need 7 billion. The worst thing happen here because they don't have anything cash coming from the last quarter. If that's the case, and I expect here government need to do some bailout for next year, right? Maybe they should do in 2 phases, one for this year and then wait and watch and do for something more next year. Otherwise, company do something here and then use for next year, right? Let's take the other one back. Oops. So, right, because otherwise there is less cash available. If I do that total debt to cash, then the company need to do more, or the company maybe that's little bit on the higher side. It's hand to mouth, right? It's going over 110%. If it's go, let's do the government in 2 packages. Okay, then it's close, right? Because you see the debt is over here in the second year. So it's the main thing to do here is, sorry, to kind of this is that their problem just not finish, right? Because government, maybe that's why government is thinking that what they need to do to survive, right? For them to survive, because they have a lot of the commitment in next year. Especially the problem is here, the capital commitment, and lot of debt is here, need to pay. So that's what I just want you to highlight. One more thing, maybe I'll show it to you as well. So the next one is, yeah, what is the company trying to do, right? So company trying to do many things, right? So this is their Air Canada COVID-19 measures, right? They have significantly reduced their capacity. They have used all their credits available, right? They draw down 600 to 200 to 600 million to 200 million as of March, right? They have used that, and they are doing put in the financing for 18 Airbus. What they are doing, so they are trying. They cancel their share repurchase. So these are the more high level points. I just cut it for you. So now my question is to you, right? So for sure this is cheap, but this has lot of bad assets, basically a lot of debt attached to it. So it won't be that simple. So on an average investor, I won't suggest that you, even the stock is cheap. For sure, my understanding is that the stock should go up, but it will take some time. It won't be like within 1 or 2 years. It's right. It was earlier, I think it was $50 something. Now it's $14 or $10. If the bailout won't happen next 1 or 2 weeks, maybe it will be like $7, $10, even further go down as well. But will it come back, or how long it will take to come back? Maybe it's not that immediate, or it will take, but there is a higher chance of higher volatility and higher risk. For the portfolio of the medium profile, I won't suggest this, but somebody who has like so much extra money and can forget about once you invest and forget, I think these kind of a stock they can try on this one. But if you see looking like an immediate return, no, I don't think so. I don't think on that Air Canada, okay, will give that. But will it bounce back? I'm pretty positive it will, but it will take some time. So that's what my view on this Air Canada. Hopefully, if you like it, kindly subscribe to my channel and like this video and share with others. And there are many other videos on my channel too. So if you want me to cover any other stock, kindly put in the comments and help me to reach the 1,000 subscriber goal. Okay. Thank you very much. See you in next video. Bye for now.